Hopefully, you're having a good Tuesday morning, and I'm sure that you all are having a much better Tuesday morning than a lot of the people in now not just Ukraine and Russia who have been suffering quite a bit, but Europe. European people might be suffering quite a bit sometime soon based off of some of the news that we're about to go over. It's not looking good. And you guys are probably going to realize what's gone wrong as soon as you leave your house and drive past the first gas station. So oil is once again, it's on the rise. It's been going up pretty much every day. I really should have filled up my tank yesterday. Big mistake not doing it. But oil is looking like it's going to continue getting much more expensive based on this. Okay, crude oil jumps on report U.S. is to ban Russian oil imports. Now, we were already expecting this. In fact, yesterday we were talking about some of the things Nancy Pelosi was saying about a move to ban Russian oil. Now, there are some nuances to this. It's not a worldwide ban of Russian oil, all right? It's just the U.S. so far, but we'll go over what they've said here. So oil prices jumped to their highs of the session on a report that the U.S. would ban Russian oil imports. WTI crude oil jumped about 4% to near $124 a barrel. So things are getting pretty high. And before we get too far in, good morning, Christopher Wong, Kitchener Leslie, Rich M, Mike, David, and PH Dragon. Good morning, everybody. So we've got some scary stuff to talk about regarding oil. And Strimblin, good morning. So the U.S. was set to ban Russian oil, liquefied natural gas, and coal without European participation as soon as Tuesday. So today, we're going to see that happen most likely. And Americans are now paying the most at the pump on record. So we are in the Guinness Book of World Records for energy prices. They've never been this high, and at least on average, they've never been this high. And they are continuing to surge, contributing to rampant inflation that's hitting all areas of the economy. Oil is an incredibly important part of the economy because oil and gas are used in the production of energy and the transportation of pretty much everything, right? We haven't gotten to a place where most of our vehicles are electrified yet, and so oil and gas are incredibly useful for transporting goods since most of our vehicles run on gas. A lot of our energy is made with natural gas and oil. Russia's a massive producer of all of that. And we are seeing prices skyrocket in those areas. It's likely to cause potentially a cascading effect where prices are going to be going up all around throughout all kinds of parts of the economy. We're going to see what the Fed has to say about it. Hopefully the Fed isn't going to be too hawkish on us, but we'll see what they end up doing about it. Now, the national average for a gallon of plain gas, right? Not the premium stuff, just regular gas rose to $4.17 on Tuesday. This sounds exactly like it's in line with what's going on in my area. It's probably going to be around this price when I go out today, and I probably will be filling up because we could be seeing gas prices get a little bit worse in the near future and a whole lot worse according to Russia, right? Russia is saying that gas prices are going to go through the roof. We're going to look at Russia's projections for what gas prices are going to do. Obviously, those might be a little bit steeper than what other people might say gas prices are going to do. Russia might be trying to scare people, but we'll see what Russia has to say in just a minute. So the prior record for gasoline, currently it's $4.17. The prior record was $4.11 from July of 2008, not adjusted for inflation. So if we did adjust it for inflation, it would probably be a little bit higher than that. Now, consumers are paying 55 cents more than they were 1 week ago. So in a single week, gas prices have gone up 55 cents a gallon. In a month, they've gone up about 72 cents. So we are seeing massive rises in these gas prices. It's going to translate into a bunch of costs across the economy. And according to Goldman Sachs, given Russia's key role in global energy supply, the global economy could soon be faced with one of the largest energy supply shocks ever. So Goldman Sachs is not predicting anything good. They're expecting a massive energy shock. And we could certainly see it because currently only the United States is taking part in this ban. All right. Additionally, a lot of the market is actually already exhibiting self-sanctioning, similar to self-censorship, right? But this is regarding sanctioning with gasoline as buyers shun Russian oil. So we're looking at a situation where people end up taking what they think to be the morally correct thing to do into their own hands. And regardless of sanctions, they're going to start sanctioning Russian oil, which all in all, we probably should be taking some actions against Russia. So it seems like a good thing. It's a tough decision to make if you're a company. A lot of people don't want to see these higher prices, and some companies have not gone along with it. And we're going to talk about some of the mishaps that companies have had, but a lot of companies now are coming around to the idea that banning Russian oil and not buying it is the right call to make. And we're going to very briefly just look at the price of WTI crude. You can see it's $125 per barrel. We're going to look at the 5-year chart. And we'll notice that this thing has skyrocketed to highs of 5 years and all time. It looks like it was at one point at $140 per barrel in 2008. Fortunately, back then, that did not translate into gas prices on average, apparently. So we'll see how much higher we get. Hopefully not too much higher, but Russia's saying we're going to blow these old records out of the water. We're going to see what Russia has to say about this right now. So Russia is not very happy that the United States is banning these oil imports. In fact, Russia is pissed, and they're saying some very threatening and worrying things. So Russia warns of $300 oil and threatens to cut off European gas if the West bans energy imports. So Russia is pissed. They're not happy that the United States is cutting off one of their largest sources of revenue. We're going to talk about how much money Russia makes from oil in just a minute, but Russia has threatened to close a major gas pipeline to Germany, the Nord Stream 1, and warned of $300 oil prices if the West goes ahead with a ban on its energy exports. So looking at the chart, $300 gas prices or oil prices would be absolutely insane. I mean, look at it. It's currently $125. That would be more than doubling the current energy prices. It would be absolute insanity at the gas pumps. You'd see stuff that you've never seen before at the gas pumps. It would be crazy. So the Russian Deputy Prime Minister, Alexander Novak, said it is absolutely clear that a rejection of Russian oil would lead to catastrophic consequences for the global market. He then goes on to say the surge in prices would be unpredictable, and then predicts that it would be $300 per barrel, if not more. So crazy stuff. Probably not the most likely situation, in my opinion. I don't know if we would get to $300 per barrel, right? This is probably Alexander Novak, the Russian Deputy Prime Minister, trying to scare us into not imposing any more sanctions on Russia. Obviously, he's going to take the stance that Russia is a little bit more vital to the energy economy than it is, or that there would be no alterations to how companies and countries operate based off of rising energy prices, right? My guess is if we start to see oil get too much more expensive, we're going to see a lot of activities that companies and countries engage in become not viable anymore, right? If gas is a certain price, if oil is a certain price, then there are just going to be activities such as producing some certain things out of plastic, some non-essentials that are no longer viable because you just can't sell the stuff for enough, or you can't raise your prices quickly enough to actually match the rise in the price of oil. So companies are going to probably adjust, at least in the short term. If oil is really going to anywhere near $300 per barrel, we're going to see some kind of adjustments, right? That's the law of supply and demand. If prices go up to match a decrease in supply, it's going to drive demand down so that it ends up equaling the amount of supply that you've got out there. And we'll probably see that happen sometime before $300 per barrel. My guess is a ton of activities would be completely unviable. Looking at this chart for the price of oil, if you look over the past year, a year ago, oil prices were at $65, and $300 per barrel would be about a 5x increase. And I don't think companies that were using oil as their primary product that they were using to produce whatever they were making, maybe it was a plastic, maybe it was something else, were doing it at a 5x profit margin, right? I think the profit margins were a little bit slimmer. I don't think they're going to be able to 5x the price of some of these goods. They're probably going to have to, if we did get close to this price, stop production for a little bit, and that would decrease demand and stop price from going up too much further. So my guess is we won't see $300 per barrel oil. But that's just my opinion, right? That's just what I'm thinking. I think this was a bit of a scare tactic on the Russian Deputy Prime Minister's part. So he continues, the Russian Deputy Prime Minister continues to say we have every right to take a matching decision and impose an embargo on gas pumping through the Nord Stream 1 gas pipeline. So he's basically saying that he's going to potentially, or at least Russia is going to potentially stop sending gas to Europe, all right? They're going to do this to punish Europe for all of the sanctions. So it's essentially taking the same stance as Europe. It's essentially sanctioning Europe for sanctioning Russia. And they know that Europe is very dependent on all of the oil and the gas that they send, especially through this pipeline. About 40% of Europe's gas comes from Russia. So it's quite a bit that they're getting. And we're going to hear some quotes from some German leaders and European leaders later talking about how they don't want to ban Russian oil because it is a very important part of the European economy. Now, the Deputy Prime Minister of Russia says, so far we are not taking such a decision. So they're not banning the import or the export of gas to Europe yet. He says, but European politicians, with their statements and accusations against Russia, push us towards that. So Russia's getting angry, is what we're hearing. Russia's getting a little angry. They don't like all of these sanctions. They don't like all of these statements that people are making against Russia. And there are some very interesting statistics regarding how many people have sanctioned Russia that we're going to look at in just a second. But it is notable that Russia is the world's third largest oil producer, right behind the United States and Saudi Arabia, and the world's largest exporter of crude oil to global markets. So they certainly mine a whole lot of oil, and they don't use all of it. They use relatively little compared to what they mine. They export a ton of it, and Russia is also a major producer and exporter of natural gas. So a lot of energy comes out of Russia, and energy is certainly something that's very useful and is about to get a lot more expensive from the look of things. The European Union receives around 40% of its gas via Russian pipelines, several of which run through Ukraine. So it looks like people, both on the Russian and Ukrainian side, have made sure not to interrupt those gas pipelines. You know, they don't want to blow any of those up because they know the European Union would not be too happy, and Russia probably wouldn't be too happy with it either, because they are making quite a bit of money selling this stuff to Europe. Okay, European politicians, this is according to the Russian Deputy Prime Minister, European politicians need to honestly warn their citizens and consumers what to expect. He says, if you want to reject energy supplies from Russia, go ahead. We are ready for it. We know where we could redirect the volumes to. And he doesn't elaborate on that, but my guess is he means probably to China, and probably at a pretty steep discount compared to what world energy prices are. I mean, this whole situation, depending on what goes on the Chinese front, could be a very beneficial situation for China economically. Okay, China is having a heyday, getting a ton of great deals from Russia because they're one of Russia's only trade partners, certainly the largest trade partner that Russia has left. Pretty much everybody else has cut off Russia. And China, meanwhile, is able to get all of these Russian goods, all this oil, all these things very, very cheap from Russia because everybody else has sanctioned them. And thank you for the super chat, Niners Zulu. Happy $2 Tuesday. I love that tradition. That is a good thing. So revenue from Russian oil and gas was seen to be responsible for roughly 43% of the Kremlin's federal budget through 2011 and between 2011 and 2020. So 43% of Russia's federal budget comes from oil and gas. This would be an absolutely massive hit. I mean, the sanctions that we've done so far have probably hit a large percentage of their federal budget, but if 43% is coming from Russian oil and gas alone, you've got to imagine that this is the big kahuna, right? If we actually end up successfully cutting Russia off from their oil exports pretty much worldwide, save China, then this would be a massive hit to the Russian federal budget. You have to wonder if they'd be able to pay their troops. We've already hit them pretty hard financially with banking regulations, and this could be the straw that broke the camel's back, or not even the straw, but the massive dumbbell or the anvil that broke the camel's back, right? 43% of Russia's revenue is coming from oil and gas. So that's absolutely monumental. It's absolutely insane. It would be a huge hit to the Russian economy if we ended up successfully cutting them off from the world. Obviously, it would be a massive hit to Europe's economy. If they're paying all this for Russia's oil and gas, it must be quite valuable to them. And thank you, Mike Steele. $2 Tuesday. Look at that, Niner. You're starting something. Thank you very much, Mike Steele, as well. So the Ukraine foreign minister has called on Western allies to impose a full embargo on Russian oil and gas, saying via Twitter that buying them now means paying for the murder of Ukrainian men, women, and children. Now, we're going to look at some companies that have actually engaged in the buying of Russian oil and what they've done since, because they may have realized it was a big mistake. But Ukraine has certainly been very vocal on Twitter, and that's probably a good medium for them to have a lot of these thoughts put out there, right? To express their discontent with companies and countries still buying Russian oil and gas, and not wanting to make the lives of their citizens or their customers any harder by actually embargoing Russian oil and gas in Europe. We're going to look at what Germany's saying about this whole situation. It's a tough situation. You're looking at a situation where these countries and companies really are dependent on this Russian oil, at least to maintain the quality of life that they have had in the past. But at the same time, Ukrainian quality of life and Ukrainian people's existence and survival is based on Russia not getting what they need, right? So if we're still buying all this oil and gas from Russia, essentially paying the money that they can continue to use to buy equipment and to pay their troops, it could end up meaning more deaths in Ukraine. And it's certainly not a good situation. But regardless, German Chancellor has pushed back against calls to ban Russian oil and gas, saying such a move could put Europe's energy security at risk, and imports from Russia were critically important to citizens' daily lives. So it is a tough situation regardless, right? You can look at it and say, obviously, Europe should be banning Russian oil and gas because they are paying a country that's currently engaging in the slaughter of Ukrainian citizens. And you can look at it from the German point of view and say, we don't want to do it because it's important to our citizens' daily lives. Europe's energy security is at risk. We use that for, we use the oil for a ton of different things, and it's really important to how we operate. So you can look at it both ways, and it's a tough situation. It's certainly a tough situation. I'm happy that the United States is starting to take some action against Russia because we only use 1%. 1% of the oil that runs through our refineries is Russian. So we're able to take a bit of a stance, right? We're not too dependent on Russia. But if 40% of Germany's or the European Union's gas in general is coming from Russia, that's not a good thing. So the German chancellor has continued. He says you can't simply close down use of oil and gas overnight, even from Russia. That's obviously not something that every country around the world can do. It probably would have pretty far-reaching consequences if they did decide to shut down their imports of Russian oil and gas. It would probably be somewhat catastrophic. You'd see really horrible stuff economically, and who knows? In Europe, it might be different than the United States. They might not have the stockpiles. They might not have enough supplies at gas stations or at grocery stores and whatnot to sustain themselves if transport has to shut down. Who knows what the consequences would be? Maybe there would even be some deaths over there. Who knows what would happen if they really did cut off that much oil and gas all at once. Now, the German chancellor has continued and said we have to make sure to deleverage our dependency on Russian gas, on Russian oil, while acknowledging at the moment that the dependency is, to a certain extent, still there. So it looks like they will be pivoting away, at the very least, trying to get rid of a lot of the Russian oil and gas from their trade over time, though. So they're not going to be doing it instantly. It's not going to happen overnight, but they are going to get rid of it at one point or another, and that's probably for the best. Now, we're going to return to some of these interesting stories and talk about more oil and gas, but for a second, let's just admire these stock prices, all right? The S&P actually took quite the hit yesterday, all right? Nobody is liking the sound of all of this oil and gas bearishness, all right? A lot of fears are being stoked about potential rises in inflation. We're probably going to see a rather high CPI print coming out relatively soon, and all in all, the stock market, will actually take a look at this longer-term chart right here on the S&P, did just break down through the support zone of 426-ish, 425 to 430. So we did break down through that yesterday. We've not returned to it yet. We're not at the lows, but we're certainly not at the highs. It's not looking great for the stock market overall. However, there are a couple of stocks that are moving up in a very significant way. CEI, MULN are both on the run today, all right? CEI is an oil play. It is doing exceptionally well ever since this whole oil crisis spouted up. Not necessarily fundamentally based oil play, but people are buying into it on the hype that oil is moving up in price. The more oil moves up in price, the more likely it is that CEI will continue to run. It's just a couple of minutes ago hitting highs of this rally at $1.77. I think we started talking about it sometime yesterday, early on in the morning, when it was close to $1. It was maybe $1.04. So already significant upside that we've seen from when we first started covering it. And there's likely, in my opinion, there's likely some more upside on the way. If we do end up seeing a massive sanction coming to Russia, maybe even something on the European side, we could see oil prices getting, they could get more expensive. This might not be the peak, 124. It most likely isn't. I could see it getting a little bit higher than this. It got higher than this in 2008, and this is seeming, at least in my opinion, like potentially a worse crisis for energy in the short term, at least, than what we were seeing in 2008. But we'll see what happens. We will certainly be keeping a close eye on these stocks, and MULN is also running up. It's not at the highs that it was around 7 or so days ago, but it's on the way up. So we are making highs this pre-market of 134. And we're close to 123 right now. We'll see what we can get on MULN. It closed the day at 106 yesterday. So we're up. If you were buying in yesterday, you're up. So all in all, cool stuff. Now we'll return to the stories that we've got This is just an interesting tidbit. Russia is now the world's most sanctioned nation. So Russia's invasion of Ukraine has prompted 2,778 new sanctions to be placed on them. Putin isn't too happy about this. And more so than Putin, the Russian people and the Russian oligarchs, the wealthy Russian elite, are probably not too happy about this as well. And we're seeing something very interesting happen in Switzerland. Typically, Switzerland has remained completely financially neutral throughout all of these incidents, right? Even during World War II, they remained financially neutral. And that's why you always hear that stuff about Swiss bank accounts and wealthy people keeping their money in Swiss bank accounts. But Switzerland even has began to seize and halt and freeze Russian oligarchs' bank accounts. So even the wealthiest of the wealthy in Russia, who ended up putting their money in these Swiss accounts expecting it to be safe, bar any kind of situation, that is not the case. Even the Swiss have turned on Russia. So it's looking like a very scary situation if you're Putin, because pretty much everybody in Russia is looking much, much more poor. A lot of people don't have access to the wealth that they once had, and a lot of people are probably very mad at this guy right here, mad at Vladimir Putin, because he is the one person who's pretty much responsible for this whole situation. You know, it was his decision to invade Ukraine, and nobody is too happy about it. I can't think of anyone who's too happy about it. Maybe the CEO of CEI is happy. Maybe some people who bought CEI stock are happy, but even then, you're still probably upset at the atrocities that have been committed in Ukraine because of Putin. So even the Russian wealthy elite are probably starting to turn against him. The Russian generals are probably not too happy, and we really could see some kind of accident occur for Putin sometime soon. And oh my gosh, guys, have I seriously just been talking? Was I not sharing the screen that whole time? I really wasn't talking, or I wasn't sharing the screen. Look at that. Well, whoops, guys. Whoops. Thanks for pointing that out, though. Hakazoo. Thank you for pointing that out. Nobody else was pointing that out, but we had a bunch of stuff on the screen. Believe me, we had a bunch of stuff on the screen while I was talking about it. Regardless, the most important part is probably, I read the highlights out, so not too much of what we've done was visual, but here's the story on Russia. 2,778 new sanctions. Incredible stuff. So people are pissed at Putin. We probably aren't going to see him around too much longer, in my personal opinion. If I had to make a bet one way or the other, I'd say we're probably getting rid of him at some point. Probably not the United States getting rid of him, but people in Russia might be doing that. Now, I'm not advocating for any kind of killing or anything like that. That's just a suspicion that I have. So MWS says, you still got a case of the Mondays. Yeah, I do. Even though, I have been pretty much every day drinking some coffee mixed with matcha. It's actually a good combo, I think. Coffee matcha. Pretty good stuff. Now we're actually going to start pulling up the real stories. We're going to have them on screen this time. So Shell, British oil company, or a British gas company, is to stop all Russian oil and gas purchases and apologizes for buying a shipment after the Ukraine invasion. So it's a funny situation and a sad situation, depending on how you look at it, what Shell decided to do. So oil major Shell on Tuesday apologized for buying a heavily discounted consignment of Russian oil and announced it was withdrawing from its involvement in all Russian hydrocarbons. So they've gotten a lot of backlash after they, on Friday, ended up buying some oil from Russia. So on Friday, Shell purchased 100,000 metric tons of flagship Urals crude from Russia. And people are pissed because it was reportedly bought at a record discount. And already, the reason that was at a discount is because many firms have already been shunning Russian oil. And Russia and those Russian oil companies are having to give some kind of incentive to any company willing to do business with them to actually buy their oil. So it looks like Shell took them up on the deal, took them up on the offer, and ended up buying 100,000 metric tons of this stuff for a record discount, according to this story right here. So they said, after they've done this, they said, as an immediate first step, the company will stop all spot purchases of Russian crude oil. It will also shut down its service stations, aviation fuels, and lubricants operations in Russia. And this is after they've received heavy criticism for that purchase. And Ukraine's foreign minister has been one of the most vocal against all of these purchases that these oil companies have been making from Russia. Okay, he launched a scathing attack on all firms doing business with Russia, saying that some major oil companies could find themselves on the wrong side of history now. I don't believe he mentioned Shell specifically, but he has said, and this is a quote from him, the Ukrainian foreign minister, said the world will judge them accordingly and history will judge them accordingly. So it looks like Shell has decided they want to be on the right side of history. They don't want to deal with all of the pushback that people might be giving them after hearing about these purchases at a steep discount, kind of taking advantage of the situation for a financial gain. We're going to see if there is any long-term pushback on Shell. And I believe, I don't know what the, yeah, I think this is it. I believe that SHEL is Shell's ticker symbol. No, probably not. Let me find Shell's ticker symbol real quick. If they are a stock, actually. Okay, well, I guess this is actually it. So, apparently this is Shell's stock, and their stock, let's see what it's done. It's actually going up on this news. So, Shell stock is going up, most likely because oil prices are going up pretty dramatically. And, understandable that even though they had this little blunder, their prices are still going up. They're going to be making a lot more profit. So, Shell's price is on the rise. There we go. We'll pull back MULN now. All right, so Shell is not doing too bad, but it does bring up the question of what kind of approach are these companies going to be taking over the long term? Not just oil companies, but what kind of approach are companies going to take regarding not just the financial aspects, but the environmental, social, and governance aspects. This is a term, ESG, that you guys have probably heard before. If you've been involved in investing, you've probably heard the term ESG because there is a movement going on to involve a lot more of ESG regarding where people make their investing decisions. And we're already seeing it a lot of the time. Companies are taking social stances, they're taking political stances, and they're doing it in an attempt to shore up investor confidence. And environmental, social, governance are essentially three of the main aspects of a company separate from the financial aspects, right? What people decide, when people are deciding whether or not they should invest in a company, they often like to look at the ESG as well as the financial aspect. Not everyone, but a lot of people do. It's the reason that sometimes tobacco companies and sometimes oil companies, people look at them as not as worthy investments. A lot of people just say, hey, I'm staying away from those cigarette companies. I'm staying away from oil companies because they either don't like the social aspect of, say, the cigarette companies, right? Because of health and safety, because they can cause lung cancer, or the environmental aspect of oil companies because they do end up causing some pollution and whatnot. And also, a lot of tech companies take a government stance, right? They have and a social stance, right? They have opinions on what politicians are doing and what they should do. And even Elon Musk took a somewhat governing stance, right? A governance stance when he decided to sell 10% of his Tesla stock to pay some taxes publicly, just so that he could pay the most taxes that anyone's ever paid in history, in United States history at least. This is something that we're probably going to be seeing a whole lot more, something that people might want to start thinking about when they're looking at investing. Consider the ESG, consider the impacts that whatever companies you're investing in are having on the environmental, the social, the governance. It's something that is becoming more important, and we do sometimes see companies take big hits if they make big blunders socially and environmentally. So it is something to consider. It's something apart from the financial, because obviously, if you're just looking at this from a numbers perspective and taking out the human aspect, the social aspect entirely, then obviously Shell should be buying up as much discounted Russian oil as they can from purely a financial viewpoint. But considering the ESG and the impacts that has on the world socially, governance-wise, and environmentally, maybe not. That's probably not the right choice to be making. So it looks like they are starting to change their actions, changing the actions they're taking financially, and make financially less logical decisions when taking into account other aspects. Traditionally, what we've often seen in the world of corporations is they completely ignored the ESG over maybe the last 100 years or so. Completely ignored the ESG. The duty of a corporation was to return the maximum amount of value to the shareholder. That's what they've always taught us, at least. And that's how companies operated for a while. But it looks like that might be changing, and probably for the better. I think that we do need to take a more wholesome approach to how these companies operate and the real externalities that they pose for a lot of the world, a lot of the things that these companies do, they need to look at the externalities that they're causing when they do them. And that will lead to a much more sustainable world, I think, and a much better world. Nobody wants to live in a world that's being destroyed by pollution and corrupt companies, dumping waste in somebody's backyard. So I think that it's a good thing we're starting to take into account more of the environmental, social, and governance related aspects of a company. Now, we are getting the market open. Exciting stuff is already happening. The market overall, the S&P is not actually down that much. In fact, it's up 0.02% regarding the close on yesterday, but most of the pain that we have seen in the S&P was yesterday. In fact, from yesterday's open to the close, we were actually down 3% on the S&P, so a staggering drop. The FinViz market map did not look good at all. We saw a lot of the big tech companies blood red as can be. Now, CEI up 24%, MULN up 10%, and gold up 1%, silver up 2.5%. A lot of these inflation hedges are moving up, and a lot of the gold stocks and the silver mining stocks are following them. Anyone who's been holding those is probably sitting pretty. Their accounts aren't down nearly as much as they would be if they were purely in normal stocks, right? If they weren't in any of these inflation hedges, then my guess, if I wasn't, then my guess is my account would be down pretty dramatically. But my account is not down all that much from this whole Russia situation, because gold has actually been hedging it in the opposite direction, which is exactly why you want to have a diversified portfolio and have holdings in not just a couple of sectors, not just a couple of different stocks. You want to have a pretty diversified portfolio, in my opinion, for most of the time. It does help out. It helps you from getting to all-time account lows. So that's just my opinion. I think gold and silver have been looking like a good investment for a while. It looks like that's finally starting to pay off. We're going to look at some other things that have been causing some fears in the world, some other things that could be causing some tensions. Also regarding Russia. So fears grow among Russia's neighbors that Putin might not stop at Ukraine. Now, is this actually going to happen? Who knows? I mean, we've already pretty much sanctioned Russia to the extreme. And will we actually see any more actions than that taken against Russia? It doesn't seem super likely. Putin has nukes, and nobody wants to mess with that. Putin's been pretty blatant about threatening it. We've already taken away a lot of what Putin has, right? A lot of the support that he has, a lot of the success of Russia has been taken away due to these sanctions. Russia's economy is really been crippled, and we're probably going to see it get a lot worse over the course of the next year. Russia will probably enter a bit of a recession, but we'll see what actually happens. Now, tensions are rising in Europe's ex-Soviet nations on fears that Putin might not stop at invading Ukraine and could have his sights set on them as well. Lithuania, Latvia, and Estonia are members of the EU and NATO, so they probably don't have too much to worry about. But we're going to take a look at this map right here of all of the ex-Soviet states. So you can see Estonia, Latvia, and Lithuania. Those three are right here, right above Belarus, which is actually quite friendly with Russia. Now, Russia is in the process of invading Ukraine, but there are a whole bunch of other states, a whole bunch of other nations that used to be Soviet states, and those include Moldova, Georgia, Armenia. Armenia is actually one that's close to my heart. I'm 50% Armenian. Azerbaijan, Uzbekistan, Turkmenistan, Tajikistan, and Kyrgyzstan. I'm not great at pronouncing these words. Kazakhstan also there, so there's a lot of countries that Russia might have their sights set on, but they've already faced very harsh sanctions. I don't think Putin expected the sanctions to be this bad. I don't think he expected the world to be so united around stopping him, and it seems like it might be a big blunder to end up invading any other ex-Soviet states, so we're probably not going to see that happen, but it's a possibility, right? It's something that people are worried about in those states, and we are looking at an incredible gain on MULN. I just want to point out, up 26% today. We just pumped up over the course of 4 minutes from 118 to highs of 136. Now, CEI, we're going to see if we can get to highs of the day. If we can pump up above 177, that could be very good for us. 180 might be resistance level. We'll see. 180 was an old resistance level for us, during the old pump that we were on. When we ended up sinking down, we got stopped out at 180 on our rebound. We'll see if 180 acts as a resistance for us this time. It looks like it stopped us at least when we got close, but we'll see if that remains to be the case. Now, I do want to point out that a lot of these stocks are getting a whole lot of attention today. on StockTwits, you can see MULN is the number one top trending stock right there. CEI, or I should say the number one most active, right? If you're looking at the trenders, they're not actually up there. A lot of their mentions have come over the past while. Other stocks are trending right now, but they have the most mentions, okay? MULN with about 15,500 mentions. CEI close behind it with 14,600 mentions. Both of these are near the top of the list, right? The S&P is obviously up there. A lot of the time people like to talk about SPY. A lot of options traders talk about SPY on StockTwits, but MULN and CEI are the two highest ranking individual stocks on StockTwits. A ton of people talking about these. On Google Trends, you can see both of them are ranking very high, with CEI being in red and MULN in blue. A lot of people are talking about these stocks. So it's interesting stuff. You know, these could certainly go higher. MULN has less of a direct cause than CEI, right? CEI is moving up off of the Russia oil news. MULN is kind of just doing its own thing. People might be hoping to maybe squeeze out some shorts. We'll see if they can do it. Hopefully they can, but CEI certainly has a lot of people very interested in it right now, and in fact it's up 40%. We are hitting that the $1.80 level. It looks like we just got past it, and now we're at 182. We'll see if that holds, or if we just just blow right past it. Maybe we'll play around with it for a little bit, but from the look of things, we're making some strong movements to the upside. 185 on MULN. A lot of these pump plays moving up pretty significantly, and MULN 135 right there. CEI 187. Great movements on both of them though over the course of the trading day. You know, it is pretty much impossible to lose money on them unless you were shorting them over the past couple of days. You know, if you were holding until now, they're all green. And at any point, you know, if anyone wants to take profits, they might want to start slowly taking a little bit of profit. You know, that is a good strategy. I think it's not financial advice, but what I like to do is slowly take a little bit of profit here, a little bit of profit there. And that way, you know, if a stock does happen to crash down, if the rug gets pulled on a stock, you've already locked in some gains, and that way you don't get screwed, right? And you don't end up feeling too bad. At least you've almost guaranteed sold some at the top if you're just constantly selling a little bit here and there. Depends on how much you've got in it. You know, it might not be worth doing with smaller accounts, but Scarlett says, Rob, what is the target price of CEI? You know, it's really impossible to say. It really, I think, in my opinion, it depends on what the top of oil is going to get to. Obviously, CEI's rug could get pulled before oil tops out, but oil has been getting incredibly expensive. It's been going up over the course of the day. 125 now. Was at 124 during the pre-market. So we'll probably see CEI continue to rise with oil. I mean, that's the main catalyst that we've got going for it right now. And if oil keeps moving up dramatically, then my guess is CEI should continue doing so. But it's not a guarantee. We've really yet to see how bad these sanctions are going to get, if Europe is really going to partake in a lot of these sanctions. We do not yet know what European countries are going to engage in them, but if they start engaging them in a big way, it could be pretty dramatic. Now, we're going to look at the short interest on these stocks just to see what's up with it. And we will take note. Yeah, CEI at 196, nearing $2. Looks like it just blasted right through the 180. CEI's short interest currently at 10.23%, 28 million shares short. All right, so decent number of shorts in CEI. We'll now take a peek at MULN, see what it's got going for it short-wise. This one is a much smaller market cap, so there we go. All right. About 29% short on MULN, 29.95. Big short interest percentage of the free float on MULN, 5.93 million shares currently short as estimated by Ortex. You can see it right here. There's been quite a bit of fluctuation in the short interest on MULN, but big increase today, okay? A lot of shorts taking a new position potentially on MULN. It hasn't seemed to slow down the price that much, though. We're still fairly high. Both of these stocks, it looks like, are taking a little bit of a breather. CEI bouncing off of near $2. Maybe it'll use 180 as support instead. We'll see what it does. It looks like it just hit 180. And MULN remaining pretty stagnant near the highs. Sndl is getting pooped on, even with earnings around the corner. Good time to average down, says Mike Markley. Yeah, Sundial is not doing too great, and they do have their earnings call now. I'll say there are a couple of things going on with Sundial. Their earnings call is coming up, and looking at, we'll pull up the year chart just for this. Their last earnings call did end up pumping them up to close to the high 90s. I mean, and technically, if you really looked at the after hours and pre-market activity, it hit 99.99 cents. So it got almost to $1. Now, Sundial, this earnings call might not be as good. You know, we've seen a lot of inflationary pressures, and that could have translated into their cost of growing. So we'll see what goes on with Sundial this earnings call. You know, it could be a slightly less bullish earnings call than what we saw last time, but depending on what they choose to highlight, if they really choose to highlight a lot of the future growth potential that they've got and a lot of the legalization catalysts that are coming in, that could be very good for the stock. As well as, you know, they've done the Alcon acquisition. We're expecting that to close by the end of this month. It hasn't happened yet, but let's see when their earnings call is. It's the 17th, so it doesn't seem likely that it could happen. It could happen, I will say. It could happen before the earnings call, but they have until the 30th of March, they've said, is when they're expecting to close that by. So if at some point in the next week they do it, we'll have that happening before the earnings call, and they might talk a little bit about it. But they'll probably, at the very least, mention it. But yeah, Sundial's gotten quite cheap, down below 50 cents again, down to 46.5 cents. And the market overall, not doing too bad, not doing too great. Look at that. 419 on the SPY, down 0.08%. Nothing crazy. And we're seeing similar stuff in crypto. It looks like crypto is behaving somewhat similarly to the market. You know, it's not down all that much, but it's definitely not green. It's down about 1% on Bitcoin. And over the past couple of days, Bitcoin has really stagnated. It's leaving a lot of people wondering, what is Bitcoin's role, right? Is Bitcoin going to benefit greatly from this Russia-Ukraine situation? Are a lot of people going to turn to the decentralized financial options that are out there? Potentially countries might wish to engage in the use of these cryptos because they've seen what's happened to Russia, right? As soon as people decided to sanction Russia very heavily, remove them from the SWIFT system, there was nothing Russia could do about it, really. And it had extreme economic consequences. It really crippled Russia when we engaged in all of those sanctions against them. So some countries might want to start holding some cryptos. You know, I believe it's El Salvador, I'm pretty sure, uses crypto as their primary currency. And I'll pull this up for anyone who hasn't heard of it. But the headline on this story is, this is just the first story that popped up. El Salvador's president is taking a massive risk on Bitcoin. The president of El Salvador is making a huge bet on Bitcoin with his country's treasury. The president hopes to borrow $1 billion to stock up on Bitcoin and to build a Bitcoin trade zone near a dormant volcano. The plan has made him a hero in the crypto community, but many are concerned it's too big a gamble and possibly part of an authoritarian turn. Interesting, maybe. But I know the president of El Salvador was opening up crypto wallets for all of the citizens and giving them a couple bucks of free crypto when they opened up their crypto wallet. So it's an interesting story at the very least, right? El Salvador is one of the first nations to really be engaging in Bitcoin utilization to close to its maximum capacity, right? Really turning it into the official currency, I believe, of El Salvador. So there is a lot of faith that the El Salvadorian president is placing in Bitcoin. We're going to see if that faith is well placed or not. But during the meantime, at least, Bitcoin is stabilizing. At least it's not crashing during this period of extreme volatility. You know, there are probably people who are more bullish on it now than ever, now that they've seen all of the utility that it has for getting money out of countries where there are sanctions in place. You know, it is a somewhat safe asset to be holding in terms of the government's ability to take it from you, right? If you have it on your own crypto hardware wallet, there's relatively little that anyone can do to take it from you, short of actually coming to your house and physically taking whatever hard drive or USB you've got it on. So it is a somewhat secure asset, similar to gold in that sense. Until we get better hackers, it's similar to gold in that sense. But at the same time, you know, people might just want to hold gold, right? They might not want to hold Bitcoin. Granted, this is much easier to transmit online, right? You could, if you held Bitcoin as opposed to gold, or if you held a mixture of the two, you could use the Bitcoin to buy stuff online and whatnot. If there were sanctions against, say, the ruble, if you couldn't buy stuff with the ruble, you could still potentially trade people Bitcoin online for products and services. You could probably, buy some kind of streaming service. Maybe you could at least transfer the Bitcoin to some other kind of currency at which you could use to buy a streaming service or something like that. So there is some utility in Bitcoin, right? There's stuff that you can do with it. We'll see how this whole crypto community progresses, though. We'll see if it really gains a lot more utility, if people really start turning to it as a means of safety, as a safe haven for their assets. We'll see if that happens. It looks like the S&P is starting to take a turn for the better. We're starting to get some buying pressure coming up in here. All in all, it's looking like good stuff. And CEI using $1.80 as support this time, it looks like. $1.80 will be acting as support for CEI. It looks like a lot of stocks are starting to rebound over the past couple of minutes. Sundial moving up as well. And MULN not moving down all that much. So good stuff to see. CEI, it's going to be interesting. Can we break $2 today? We're already up almost 50% on the day. It's an interesting thing to see whether we'll be able to get past 2 when we're already up this much. It would not surprise me if we did, especially if we saw oil prices rising even more. Oftentimes, though, it seems like a lot of the changes that we get in oil prices happen overnight during announcements that come about sanctions and whatnot, that kind of stuff. So we'll see what happens with oil prices today. In fact, oil is already up 5% on the day, up $6 per barrel of WTI crude. So pretty crazy stuff. A lot of these oil stocks will probably be sitting pretty high when we look at the FinViz market map. Yeah, look at that. You can see that oil companies are one of the greenest sectors out there. Regional banks and banks in general seem to be doing pretty well. Looking at the overall market, a lot of the tech stocks were destroyed yesterday. Microsoft and Apple were down close to 3% each. And Google, Amazon, Tesla, those were all down pretty big, at least when I checked around 3 o'clock yesterday. But oil and gas are continuing to perform pretty well. Exxon, Chevron, Marathon, Phillips 66. A lot of these companies doing pretty darn well during this whole gas crisis. Now, that's not to say that these rising oil prices will be permanent. Hopefully they won't. Hopefully we'll get these supply chains back in order. Hopefully the Russian invasion will not be lasting all that long. And we'll get to the end of it sometime soon. That's the hope. It's not a guarantee. But it would be good to see these inflationary pressures alleviate a little bit. And we're going to look at the inflation chart real quick. And we haven't gotten a reading for it, right? We're going to get the February reading. Let me see when the next CPI report is coming out, actually. Let me see when that is. Should be relatively soon. We've had this last report for a while. So the next CPI report that we're getting, the next inflation-based report that we're getting should be coming out on Thursday. So the CPI data coming out Thursday. There we go. So this Thursday, CPI inflation numbers, and boy, oh boy, could they ever be big. I mean, they might not be the biggest. The one after this might be a real big one. And that could be very scary for a lot of people, seeing the next inflation report after this upcoming one for February, because a lot of these rising oil prices are happening today, and that's not going to be baked into the CPI. But we're going to see what happens in the future. I mean, I'm expecting a continuation in the rise in inflation. It's not going to be pretty on the chart. We're not going to like the look of it. I mean, even looking at the 25-year chart, it doesn't look very good. Over the max, we're not at the highest we've ever been, but we're likely on the way up. We're likely on the way up, and that is worrying for a lot of people, not just because of rising prices. It's worrying for people because the Fed is probably going to want to take some kind of stance. The Fed is probably going to want to do something about this rising inflation, right? They might not be as hawkish as we were initially expecting because there is a lot of volatility. There is a scapegoat for them to write off a lot of these price increases on. So if you're looking at this from the Fed's perspective, you could potentially be thinking that maybe the Fed isn't going to be as hawkish because a lot of the price increases that we're likely to see in the CPI at least, and potentially even in other goods, are likely going to be tied to the rise in the price of oil, which is due to a geopolitical event. And the Fed can kind of write it off and say, well, that's not because of low rates and money printing. That's because of the supply chain with Russia. And to be fair, a lot of these rising oil prices are. I mean, if you look at how sharp of an increase we're going through right now, this is surely because of mostly the oil crunch that we're experiencing, at least this most recent pump. Now, I'm not saying that we weren't on a sharp increase before that. Looking at the past couple of years, we were certainly rising since the COVID crash, right? Since we got down to pretty darn cheap prices for oil, we've certainly been on the rise. This is an extreme spike, though. So the Fed will have some excuse. They'll be able to say that a lot of the inflation is temporary, transitory, if you will, and that some, it's due to what's going on in Russia and Ukraine, and that interest rates might not need to go up that much. Maybe they'll raise them a little bit, but they don't want to shock the system and whatnot. And to be fair, the Fed is going to look at this whole situation, and the point of raising these interest rates could be, likely is, right, that they want to decrease spending. They want to decrease demand, which we're already seeing probably to a somewhat serious extent now that these oil stocks, or not oil stocks, but these gas prices and these oil prices are going through the roof as inflation really gets worse. And people are somewhat fearful about the situation in Russia and Ukraine. I know a lot of people are pretty fearful about the potential for a nuclear war. A lot of people are worried about Putin's mental health. We might see a little bit less spending in general just because of those pressures, and the Fed might not take it upon themselves to raise rates as much. We're going to see. I mean, the Fed, the one thing that the Fed does not want to do is crash the stock market. They realize the stock market's been experiencing quite a bit of pain lately. Even the S&P at this point has been experiencing a bit of pain. I mean, from the highs that we were at in January to now, it's down about 12.5%. And if the Fed really ramps up rates quite a bit, that could take us down. That could take us down lower. It depends on what they do. But I mean, the last thing the Fed wants to do is crash this thing and take everyone down with them. So we'll see what their response is. I think that they'll be a little bit more dovish. I mean, that seems to be the overall vibe of the Fed. Powell has really stepped back from a 0.5% increase in rates this March. He's really more likely to do a 0.25% increase in rates. So he said it himself that that's what he's aiming for. That's what he's advocating for. He's taking a little bit more of a dovish approach, as dovish as you can be when you're hawkish. It seems like that's what Powell's up to. So we're going to see hopefully good stuff at the Fed. And, the stocks at this time really need all the support they can get. I mean, once again, looking at this market map, it's kind of actually dominated by green. It looks like there's a lot more bright green than there is bright red at the moment, but a lot of the losses that we experienced were yesterday. And this isn't a perfect representation of the market. I mean, some of the, these are all, for the most part, pretty darn large market cap stocks. There aren't many small market cap stocks in here, but let's actually see what we can do if we look at full. So, yeah, look at that. We're now looking at, I guess, a full representation of the stock market, a whole bunch of smaller market cap stocks. There's still a decent amount of green over the past day. The past week is a different story. A lot of stocks are red. Energy stocks are looking pretty darn good. Utility stocks, cash flow stocks are looking pretty good. Stocks that make money not based off of growth and sales, but things that people need to buy day after day are looking pretty good. Because people are interested in cash flow at the moment. People are interested in economic security, right? They don't want to take a risk on a lot of these stocks. And DWAC, we're going to take a look at. I just glanced over and noticed it's been taking a bit of a tumble lately. So let's see. It looks like weakness is possibly due to uncertainty surrounding the Truth Social app. So let's see what we've got on DWAC, why it might be down a little bit. Might not be too much to report on, but it is notably falling just a touch, and we're going to see if we can figure out why. There have certainly been some bearish stories about them, but what else is new? Okay, so this is what you can expect, right? In the world of media. Digital world acquisition is shaping up as a disaster. Look at that. So both politicians and the internet often promise far more than they can deliver. As a stock at the intersection of these two, DWAC stock is on its way to disappointing its base, seeing huge gains, but there may not be enough to support these valuations. Let's see what the explanation is. 59% pulled that they want. Republican nominee, all right. But what does it have to do with the stock? Okay. Okay, so nothing too substantial there. It's just kind of a bearish story. Sometimes these fluctuations in stock price um, aren't too news based, right? There's sometimes just traders' moves. It looks like this thing has been moving up lately, and now people are maybe looking to take a little profit, and some people were probably scared out when they saw a big drop yesterday. Some people are selling out now. A lot of people, to be fair, were sitting on a very pretty profit with this thing. If you look at the yearly chart, um, it was tough to be buying above where it was at when it was close to $100. $100, obviously, strong psychological resistance. We're going to see some bearish stories coming out. People are maybe factoring in, True Social just came out on the App Store, on the Apple App Store. And maybe they're thinking, well, that was the big catalyst that we were waiting for. But I think what we're really waiting for is to see it out worldwide and to see impressive user numbers. I would probably be waiting for that, right? That would be my take on it. I'm thinking that would probably lead to much steeper price increases when you really see how many people might have downloaded it and are using it. We'll see what happens, though. It might, anything can happen, but I would guess that it's probably going to get quite a few users once we really start getting some reports from TMTG, right? Some actual earnings reports, some earnings numbers coming out. We'll see what happens with it, but it is on the decline right now, and I think I see some people in chat saying they're buying up the warrants. Kitchen Leslie says something about the warrants. Yeah, so we'll see what goes on with it. Yeah, Max Pierce asks about the DWACW warrants. We'll take a peek at the warrants real quick. The warrants, like I said, they provide an opportunity where you're paying $11.50 per share plus the cost of the warrant if you were to hold these until the expiration. Otherwise, they're just like a more volatile version, essentially. Although today, they're not actually down nearly as much as DWAC is percentage-wise. They're down 1.38%, and DWAC is down 8%. So they're not actually on as big of a sale compared to DWAC. Obviously, right, the warrants are pretty much always have been trading at a very steep discount based off the exercise prices that you'll be able to get if everything remains the same. If all prices remain the same, the warrants are trading pretty cheaply. But we'll see. We'll see what goes on with these warrants. I mean, I'm not engaging in the warrants. What I'm doing with DWAC is I'm trading the options and the $50 calls for January 2023 right here, which I've sold at prices higher than where they are now. So I'm in the green on these at the moment. And what I've done essentially is sell these puts. Sorry, I sold puts. So essentially that will mean that I buy up shares of DWAC, pay $50 per share if DWAC ends up below $50. But I've already been paid about $35, a little bit more than $35, I think, to sell these options to people. So that would mean that my exercise price, the price that I actually end up paying after all of these transactions go through, if DWAC is below $50, the price that I'd actually pay is $15 per share. So a pretty safe buy, in my opinion. It's cheaper than what you can get with the warrants. It's cheaper than what you can get with the stock. But once again, that means in order for me to actually get those shares, DWAC has to get below $50 and be below that on January 23rd or January 20th of 2023. So it's not a guarantee that that's going to happen. The alternative scenario is it's above $50 per share, in which case I just collect a profit, right? It's just a $35 profit per share on those options. So So Kitchener Leslie says it means he's betting against DWAC. The exact opposite. The opposite. It's a long position on DWAC. The more that it goes up, as long as it stays above $50, I'm at my max profit. But the higher that it is, the better, right? So that means the lower chance that it's going to end below $50 per share. But that's just the trade that I took. It's a very safe trade in my opinion. To lose money on it, it would have to end on January 20th, 2023 below $15 per share, which we haven't seen those prices since the initial day that it was announced. It seems unlikely that we'll see those prices again. That's just my opinion, though. We'll see what happens with it. But I'm happy with the fairly safe position that I've taken on DWAC. That's, it's a more advanced way of trading it. It's not recommended financially or by any other way, to anyone. But something that's looking pretty hot right now is gold. Look at this. Gold is skyrocketing. Let's pull up gold spot price. Gold is going through the roof right now. It makes me wish I loaded up a little bit more on gold. Look at that, above $2,000 an ounce, $2,039 per ounce of gold. Crazy stuff. I wonder what Barrick Gold is doing. Barrick Gold up 2%, matching gold's gains just about. KGC is also looking green. NAK is up again today. So look at that. NAK had a great day yesterday and is up again today, hitting highs of 58 cents. Northern Dynasty Minerals Ltd. It's a gold mining penny stock that I've actually bought a bunch of just as a YOLO play, and it is on the pump up. So it's been up, from the lows to the highs. I didn't buy at the lows, unfortunately, but the lows to the highs, NAK was up 75%, and at the moment it's up about 50% from the lows. Not that I bought at the lows, but it's an interesting one, and it could, if it gets more attention, that could be very good for NAK. Now, silver's up 4.2%. Wow, silver's doing pretty darn good. CEI is dropping, someone says. So CEI is dropping. It looks like it broke through the 80-cent support, or $1.80 support resistance level. That's not ideal. And, I just realized it is actually past 10. So we got too excited today. There was too much going on in the markets. We went a little bit past where we meant to. But, a lot was going on. And MULN is also on the way down, it looks like. At least in the short term, it's down about 10. It's up on the day, 10% just about. CEI is down from the highs. It's up about 23%. We're going to see what happens with these stocks. A lot of volatility in the markets today, it looks like. The overall stock market, the SPY, is red, but the Russell's is actually green, which is exactly what we want to see. We want to see smaller market cap stocks coming back in a big way. We're going to see if we can get that happening a little bit more frequently over the next couple of days and weeks. If we can get these small market cap stocks coming back, that would be ideal. And that is the stream. So it's 10 o'clock, guys, and thank you for joining. Feel free, if you are watching this on Rumble, hit that red join button on the top to join the free locals community, free private stock group. If anyone's interested in it, you can pay if you wish, but it's pretty much free. I just post a little something every day, pretty much every day that the market's open. And feel free to join the locals community. Yesterday we talked about gas prices. They're looking like they're we'll pull this up real quick. They're looking like they yesterday, before this huge upshoot, some people were charging $7 just about per gallon of gas at some California gas stations, and crazy stuff. So that's what you can expect to see on the locals community. If anyone wants to join, feel free to do it. Much appreciated. We're trying to grow that out. I think it's a growing platform along with Rumble. And other than that, guys, keep in mind, if this is your first time viewing, we do these streams every morning at 9, so feel free to join us every day. And other than that, have a great day, guys. We'll see you in the next one. See you tomorrow. Bye.